Well, hello traders, and welcome back to another video. As you can see, I'm not in my usual environment. If you missed the last video, I'm currently in Spain for a couple of days just to wind down. It's been a crazy few months in the markets with the new administration coming into the US and all of the turbulence that we've seen in the macroeconomic landscape. So it's important to get away and to chill out for a couple of days while still staying on top of the charts if you caught the last video. That is my method of operations always. In today's video, I wanted to talk about managing your emotions in trading. Of all of the things that you can do right and you can do wrong in trading, perhaps you have a great strategy, perhaps you have the best equipment, perhaps you have the funded account, perhaps you have tons of experience. There is one thing that will make or break any trader, and that is emotional resilience. So today in this video, I wanted to fill you in on some of what I've learned over the years when it comes to this topic of emotional resilience. I've been through crazy highs and yet crazy lows in my trading career. Even at one point going through a drawdown, which was just eye-watering. During that period, I hired a performance coach and worked with him for 8 weeks. Very, very expensive, but worth every penny. I picked up a few tools that I now communicate to all of my students to help them manage their mindset and progress in trading. So let's first open by talking about why emotional resilience matters. You see, in trading, you could have a fantastic strategy. You could have something that has been back tested over 10 years and produces consistent results month on month. You could have great risk management. But if you don't have emotional resilience, you are going to be unable to turn up and execute consistently. Every time you enter the markets, you're going to be fearing taking a loss, or you're going to be euphoric expecting a winner. Often, what this causes is poor trading disciplines, revenge trading, over-risking, over-leveraging, missing setups because you have fear to enter, only to see that trade run on to be a great winner, and then taking trades you shouldn't, taking trades outside of your plan, which again is only going to result in emotional pain. So let's get into some tips I want to give you on how we can manage our emotions in trading and how we can make sure that our trades are in line with our key performance indicators to ensure we're staying on track. The first thing I want to give you is a simple grading system. I want you to grade your trades 1, 2, 3, 4. A grade 1 trade is a trade where you have followed a good process and that trade has won. A good process is a trade that fits your plan, a trade that has used the correct risk, a trade that is totally in line with your strategy, and a trade that you had prepared beforehand. Not something you had sat down in front of your charts and impulsively entered. That's how I would define a good process trade. So grade 1, good process win. Grade 2, good process loss. So the exact same, followed your plan, you've prepared for it, it's in line with your strategy, your risk is on point, but it happened to be a loser. Grade 3 is going to be a bad process win. So this is a trade that made money, but you either took something that was outside of your strategy, you didn't prepare for the trade, or you didn't risk the correct amount. That would define a bad process win. And grade 4 would be a bad process loss. So a trade that has lost money, but you have not done one of those 4 steps. It's either not been in line with your strategy, you didn't prepare to trade it, or your risk was out of line with your normal risk profile. So grade 1, good process win. Grade 2, good process loss. Grade 3, bad process win. Grade 4, bad process loss. Your objective in trading should be to take as many grade 1 and grade 2 trades as possible. Every time you take a trade and you enter it into your journaling system, you should be grading 1, 2, 3, or 4. And if you find many grade 3 and grade 4 trades, those would be bad process trades, I want you to observe the pattern over time. Now, you might be thinking, well, how is this going to help me with my emotional resilience? Well, over time, as you journal and as you're honest in your journaling process, what you're going to find is that your bad process trades, your grade 3 and grade 4, are actually losing you money over time. When you see this pattern reflected in your journal, it's going to encourage you to take more grade 1 and 2 process trades. So that's going to be tip number 1, grading your trades and being totally honest with how you approach it. Tip number 2, and this is going to be something very, very practical. Every time you take either a win or you take a loss, here's what I want you to do. I want you to stand up from your desk and I want you to walk away for a minimum of 10 minutes. Perhaps you step outside, perhaps you do whatever. I want you to step away for 10 minutes. Why do I say this? I say this to all aspiring traders. Wins can be just as dangerous as losses for an aspiring trader. Wins can promote overconfidence. Wins can make you feel like, you know what, I've got it now. I can go on and anything I touch is going to turn to gold. And very often, and you may have experienced this in your own trading, you take a great win and by the end of the day or by the end of the week, you've given it all back. You've gained too much confidence, overconfidence, euphoria basically, through that win, and it's led you to make poor trading decisions. On the flip side, a loss can be just as dangerous. You take a loss, and especially if it's a grade 3, a bad process loss, you think, okay, the solution is now to go and take a good trade and make up for it. And you may even go and take a good trade, but if it loses, all that's going to do is tip you more and more over into what we call tilt. You start trading on tilt, where you're going into that negative mind space where you're starting to deviate from your plan. So whether you take a win or whether you take a loss, at least a 10-minute break away from the charts, go touch grass, get back to reality, come back to your desk and follow this process. You sit down at your desk, you close your execution platform, you go back onto your charting, perhaps TradingView or something like that. You take screenshots of the trade, you put it into your journaling system, and you note down as much information as possible about that trade. Note down everything. Note down how you were feeling going into the trade. Note down what you knew going into the trade. Note down whether anything deviated from your strategy and your plan. And of course, grade it honestly 1, 2, 3, or 4 in accordance with the grading system I gave you earlier. Tip number 3, again, is going to be something super practical. So a question we get asked all the time here at KB is, where should I go to learn? You know, perhaps you've seen us running the trading floor or speaking at institutional conferences, lecturing in universities, and you think, how can I learn from these guys? And I get it. We don't really push education all that much. So I want to take just a minute of your time to cover exactly what we do here at KB and how we help aspiring traders. The majority of traders are in the position where they can manage risk, they know how to analyze a chart, they've maybe even been funded before, but they've still not managed to get the pieces of the puzzle to fit together and become a consistent trading professional, earning money from prop firms, living life on their own terms. And so over the past few years, we've committed to taking on between 3 and 5 students each month and getting them to where they want to be in the markets. Just like we've done for Marty, over 100K in prop firm payouts, 27K in a single day there on the FTMO leaderboard, or Sai, 250K plus in payouts, 100K from a single firm. We sent him out a trophy recently. Andy, another one, 60K in just 6 months. So look, if you're committed and serious about your trading, I'm going to leave a link down below. It'll give you all the information you need about our mentorship with a button to apply. A member of our team will then be in touch to jump on a Zoom call and determine whether or not you're a good fit for this mentorship. I do have to caveat, this isn't free, this isn't cheap, this isn't the other $500 course that you're going to find somewhere online. This is really for serious traders. So ask yourself the question, am I committed to investing the time and resources to achieve my dreams of becoming a profitable trader? If the answer is yes, check out that application down below. Thanks, guys. Whether you have a mentor, whether you have a trading buddy, have an accountability partner always in your trading. Have someone that at the end of the day, you can sit down and have an honest discussion with and tell them how you traded and they can tell you how they traded, and you can encourage one another and keep one another on track. When I was running the trading floor, at the start of every day, as soon as the market opened, we would get all of our traders to sit down and create a trading plan for the day. They would look over all of the instruments that they trade and they would note down any setups in any of those instruments that they were looking at for the day. Perhaps they were looking to long the euro dollar from a level below market. Perhaps they were looking to short gold from a level above market. We would get them to note down all of their thoughts, ideas, and their plan for the day. and we would have them speak to the person that sat next to them on the right or on their left and share their trading plan. Even if they traded different strategies, they would talk through exactly what they were looking at in the markets. Then, in the evening, at the end of the trading day, we would get them to again speak to that trading partner and show them what they'd done throughout that trading day. Perhaps they had planned to long euro dollar below market. By the end of the day, they'd actually shorted euro dollar. Sometimes they were perfectly in line with their plan, but what this allowed them to do was have someone that could keep them accountable. Their trading buddy would say, "You told me you wanted to long euro dollar from this level, and look, the market reacted perfectly. Did you get the trade?" And many times they'd say, "No, I didn't. I saw this and I changed my plan." And over time, they would begin to learn that making these trading decisions out with their plan was a recipe for disaster. You see, when we can be accountable with someone, when we know that we have to tell someone about our mistakes, we second guess our trading decisions throughout the day. We think, I'm gonna have to speak to my buddy later on and tell him that I've deviated from my plan. It's a little trick that just causes us to rethink our decisions, knowing that we're gonna have to stay accountable to someone at the end of the day. Even if that's in a group chat, Discord, Telegram, or if it's a mentor. If you have a mentor, that's a great person to speak to these things about. If someone is qualified and knows what they're doing, they will be able to give you tips to keep you on track. And knowing that you have to be accountable is a massive tool. The next tip is going to be to plan your trades when you're not in a heightened emotional state. You know what it's like if you've been trading for a while. There's news coming out, the NFP or CPI or, Fed meeting minutes, whatever it may be. The markets are moving crazy, you're in positions, things are going against you, things are going in profit. That is not a good time to be planning and making trading decisions. We need to be forward looking and understand what could happen in the coming trading session and then prepare for it before it happens. I would always recommend building your trading plan the night before. I do mine around 10:30 p.m. here in the UK, or first thing in the morning, before the London session is opened, before the New York session is open, maybe in that lunchtime quiet period, if you trade the New York session. Before your session starts, make your plan for the day. The instruments that you're going to trade, where are you going to trade them? I would recommend writing this down on a sheet of paper, even in a notepad, next to you that you can have with you at all times. And what I would recommend doing is making that plan before the markets really start moving and sticking to that plan. You see, the thing is, throughout the day, setups may develop that you didn't see in the morning. You're just going to have to live with that. So many traders say to me, I made my plan in the morning, but as the market progressed throughout the day, I saw new setups come into play and I took them instead. All I would say to you is, if you stick to your plan and you miss good setups, this will force you to be more forward-looking in your plan, to be more detailed and more expansive, to allow for things to develop throughout the trading day. When you're first beginning to plan at the start of the day, it is very possible that things will develop throughout the day that you didn't foresee in your plan. I would recommend that you don't take those trades. There is every possibility that they will work out and you haven't planned for them. But it's going to be even more detrimental to your mental state if you've planned for trades in the morning, you've seen something develop outside of your plan, you've taken it, and it's turned into a loser. At the end of the day, guys, and this is really what I would conclude with, managing your mental capital is even more important than managing your monetary capital. What do I mean by that? Funding is something that we can regain. Funding is something that we can work towards. We can, do another job perhaps if you're an aspiring trader and build up a pot of capital. You can pass funding assessments again and get another funding challenge. But what's very difficult to do is to regain your mental capital once you've lost it. We must create and nurture an environment where we are preserving our mental capital as much as possible. This is so important, guys. I've been trading for coming up for 10 years. I've worked with hundreds of traders in person on a trading floor and seen the highs and the lows. And something I can tell you is traders very often will bounce back from blowing a funded account or failing a funding challenge. I have seen very few traders bounce back from losing their emotional state. And so as an aspiring trader, you must guard this at all costs and do everything you can to nurture a neutral emotional state. One bonus thing that I would add in here: every trade you go into, you should not expect it to be a loser. You should not expect it to be a winner. If you expect it to be a winner, you're going to be overconfident. If you expect it to be a loser, you're going to have hesitation and fear. You should go into a trade completely neutral, with the idea the market may go up, the market may go down. You know your system, perhaps has a 65% strike rate, perhaps has a 55% strike rate. You should go into every trade believing there's a 50-50 chance that this trade will work. Regardless of what your strike rate says, go in with the attitude, 50% of the time this will work, 50% of the time this will fail. As long as your risk to reward and your real win-loss ratio is optimized, it doesn't matter if it's a 50-50 odds. You're going to flip that coin every single time, knowing over time, this will make money, not every time. So guys, that's going to wrap up this video. It's been a great pleasure speaking to you about how to manage your emotional and mental state in trading. I hope you derived significant value from this video. I would recommend watching it a couple of times, taking some notes, and implementing some of these practical things. I get it. It's a bit cheesy, stand up from your desk, go away for 10 minutes, have an accountability partner, all the rest of it. What I can promise you is the work that you do now to manage your emotional state is going to pay you dividends in future. When you are managing millions in capital, these things are going to come in greatly and they're going to pay dividends. So guys, any questions, drop them down in the comments below, and I look forward to seeing you in the next video. Take care.